Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices. Got a little bit of a bounce. Finally, we saw that massive drop. We put in the lows 1210 and we've seen a modest bounce, maybe even a sustained trade right around 1225. It does seem like we were just talking about 113.25 with the possibility of 113.5 and 1400, but alas, we are well off. And right now, from a technical perspective, we'd like to build a home here at 1225, maybe start to generate some interest because this one-way trade really has taken its toll on the shiny commodity. If you look at the dollar, certainly the dollar had everything to do with what's happening in gold. Likewise with the rise in short-term interest rates. When you have a 2-year interest rate yielding and a gold not yielding, it makes sense to obviously be in the yielding instrument for a short amount of time. But the dollar is certainly the catalyst here. Dollar strength, which we've seen kind of a little bit of volatility in the dollar as of late. Dollar opened up low and then rallied. That will continue to be the thorn in the side of gold right now. Gold is waiting for some kind of it moment, whether it is some kind of geopolitical moment, whether it is some kind of emerging market, China, you name it. It hasn't had its moment yet to get it back off the mat. Right now, it continues to just trade sluggishly, and this is coming from a gold bull. I mean, I look at gold as something that you can kind of you buy and hold, and I think a lot of speculators felt the same way, but if you look at positioning, they aren't feeling that way anymore. Spec longs are at their lowest since 2016, and dare I say, nearing flat, which would mean you could see spec longs turn into spec shorts. We aren't there yet, but we're very close. And I think that right now, the whole idea of gold, whether it be the cryptocurrencies, whether it be growth, whether it be higher yielding short-term instruments, there are other alternatives out there. And that is what is stealing the thunder along with the stronger dollar. And if you really want to take a risk, I think equities continue to steal from all commodities with the idea that equities continue to go higher. So right now, gold finding a little bit of a home at 1225, but it needs to do that for a sustained period at least, so we can maybe find some areas of opportunity. Speculators specifically, they need to get back in, or this market is probably destined to see lower prices in the near term. This is Todd Colvin coming to you from the floor of the CME Group.